You're welcome. We're going to continue from where we stopped. We stopped at the format of bank reconciliation statement, and today we're going to look at a practical example. And as you can see, a UK Limited received a bank statement for the period of 1st to 31st July 2018, and the balance as per the statement was $79,200 and $121,920 in the cash book. Balance in the cash book, balance in the bank statement, and they did not agree. They're supposed to have agreed, but they did not. So while examining, the following were detected. 1. A bank credit of $1,000 in euro. So as you're reading, be identifying the transaction. This is error in the bank, and it will be corrected in the bank statement. Check of $20,000 drawn to creditors was not presented. This is unpresented check. Check lodgement of $30,000 had not reflected the bank statement. This is uncredited check. Check was given to the bank to credit our account, and it was not credited. A debit of $1,500 in error by the bank will be corrected while preparing the bank reconciliation statement. $4,500 was overstated in the cash book. Will be corrected in the cash book. Dividend $780. Loan deduction $20,000. Direct credit $1,000. Interest on overdrawn $1,000. Standing order $6,000. And bank charges of $2,500 were in the bank statement, but not in cash book. So these items are the items that will be in our adjusted cash book because they are only in the bank statement and not in our cash book. We'll bring them forward to adjust our cash book balance. Okay. Required. 1. Adjust the cash book. 2. Prepare bank reconciliation statement. So let's take the first item, UK Limited adjusted cash book. Adjusted cash book is the credit side and this is the debit side. Currency side and the currency side. So from the question, $121,920, the balance in the cash book. So this is our balance brought forward of $121,920. So let's continue. While examining, the following were detected. A bank credit of $1,000. We've already read the question, and this is in the bank statement. Check of $20,000 drawn to a bank statement. A check lodgement, bank statement reconciliation. A debit of $1,005 in error, a bank, we corrected in the bank statement reconciliation. $4,500 was overstated in the cash book. This is a cash book error. So the balance in our cash book was overstated with $4,500. So since we have overstated our balance, we'll come and less it. So your error of overstated, error of overcast or overstated is $4,500. Simple as that. So the number 5th item, dividend of $780. the bank account has increased with a dividend received, we will come to our cash book balance and increase it with the same amount, and it is dividend received of $780. Loan deduction $20,000. These have reduced our bank account, and since the relationship between the bank account and the cash book bank account is positive, it will come to our cash book to reduce the balance in the cash book will be $20,000. We say loan deduction $20,000. Then a direct credit $1,000. Someone or a customer was in the bank and directly credited our account without our knowledge. So it is in the bank statement and not in the cash book. So we're going to bring it to add to our cash book balance. Say direct credit of $1,000. So interest on overdrawn, we are charging interest. We are charged an interest on overdrawn. So it's reduced. It will reduce our balance. Since it affects our bank account negatively, it will come to our cash book and affect it negatively. Say interest on overdrawn, and it's $1,000. Then standing order, you have given the bank an order to be making a payment, so it will reduce your bank account as well. Come to your cash book and reduce your cash book balance. Standing is very simple. Standing order, and the standing order is $6,000. So let's continue. And the bank charges, or they are reducing your account, both in the bank and in the cash book, $2,500. So you now balance the cash book that you're adjusting. If you add $121,920, $780, $1,000, you will get $123,700. So $123,700. Then you come to the credit side. 4,500, 20,000, 1,000, 6,000, 2,500. You will get is $34,000. So if you less it, to get a difference, is you will get 89,700. So this is the difference. That is, if you add it to this, you will get this. You add your 89,700 to 34,000, you will get 123,700. And the difference, or the balancing amount, is the balance carried down, or the balance carried down of 89,700. You close your account. You close your account. So if you add it to give 1, 2, 3, 700. And here we give you 1, 2, 3, 700. Then the beginning of next month, we get your balance. The balance will be brought down. Beginning of next month to continue our transaction, and it is 89,700. So this is our adjusted balance of cash book. Adjusted balance. Cash book adjusted balance. So if we want to prepare our bank reconciliation statement, starting with the adjusted cash book balance, what we're going to use, say bank reconciliation statement as at July 20XX. This is about reconciliation. Your currency sign and your currency sign and your currency sign. So we are starting with balance as per adjusted cash book. Say balance as per adjusted cash book. Balance as per adjusted cash book. This is our balance. This is the balance that we're going to use. After the reconciliation, using the balance as per adjusted cash book, we are going to arrive at an agreed balance as per bank statement in the equation. If your balance does not give you the same balance with this, you are wrong somewhere. Now, it's 89,700 as per adjusted cash book. So, you are going to add unpresented check. I've already explained this. For you to get this, you go back to my last video for detail of how to prepare your bank reconciliation statement. We're just fixing the figure because we already know that we know the format. Now, you're going to add unpresented check, and this is our unpresented check. Say, add unpresented check, and the check is 1. We only have one unpresented check. So, but we have a wrong credit. So this is our wrong credit. Credit in error. 1,000. You see, you add your wrong credit, and it is 1,000. Here is unpresented check, $20,000, and wrong credit is 1,000. So if you add it, you're going to get 21,000. Then you add this. If you add it, you're going to get 110,700. So you less your uncredited from our format, uncredited check. And this uncredited check, we are having a wrong debit. So since we are having a wrong debit, a debit of 15 in error. So uncredited check move with wrong, the opposite, wrong debit. So our uncredited check, the lodgement is 30,000. And our wrong debit, a wrong debit is 15. Wrong, you're going to less your wrong debit. It is 1,500. So if you add it, you get your 31,500. You're going to less. So if you less your 31,500 from $110,700, you'll be left with $79,200, and it is our balance as per bank statement. Very simple. This is one of the most simplest topic in accounting, but technical. So you should master the formats given to you in my last video, and be kind of watching the video. You watch it very well, you master it, so that without knowing the formats, you will not get it well. So try to get the format, is the main thing. So if you look at our balance here as per bank statement, must agree with the balance in the equation. If it does not, so there is something wrong somewhere. So this is a practical example on solving issue that has to do with bank reconciliation. Our next video, we're going to look at more example that is more practical. We're going to put a bank statement figures as it should be in the bank statement and in the cash book. So we'll now be reconciling. So thank you so much. If you are happy with all what we're doing, please subscribe to our channel, The Accounting for All Levels, and hit the notification bell icon. So click on all, so that whenever we release our videos, it will come to you. Thank you so much.